Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Friday, the 5th of October, 2007. The market's closed, and looks like we got our catalyst. Yesterday I was saying that it seemed as though the market, the S&P 500 that is, was just kind of marking time here above the rising 10-day moving average while it waited for a catalyst, and that catalyst was going to be either research in motions numbers or the jobs report, and maybe it was a combination of the two. News and surprises do tend to follow the direction of the trend, and we've got a real nice trend here. The spiders were up $1.79. They gained 1.17%, closing at an all-time high. So the market, shows no signs of slowing down. Well, yesterday it was showing signs of slowing down, but again, there's two ways that markets correct. They're going to either correct by pulling back in price or by going sideways through time. And as long as we have that rising 5-day moving average, I've been saying that we want to be cautiously optimistic and give the benefit of the doubt to buyers. When we do have a catalyst that's being widely watched, though, you have to be careful. It was just a month ago when we had the jobs report. I think it was this day right here. They led to a real severe sell-off. So you have to be aware of these catalysts, but remember that news and surprises tend to follow the direction of the trend. And when you see a large gap open like that, it's not time to fade the market in a healthy uptrend like this. The people who are doing that are getting hurt very badly. This market has just been unrelentless to the to squeezing the shorts over the last couple months, and hopefully you're participating in this super strength that we're seeing here. The 30-minute chart, we were looking at the trend line yesterday and saying it was holding right on it, and again, we got to move right off that level. It broke this little downtrend line, gapped up, and the shorts just, panicked, and new longs came in. It was just a great scenario for the long side today. So let's take a look now at the semiconductors. I don't even know why I'm looking at these semiconductors. I mean, they've been useless to us for the last several months, and I'm ready to give up on them, but. Let's see. We've got resistance up at $39 a share. Nothing really big is going to happen for these semiconductors until they can get above that $39 level. It is finding support at the 50-day moving average, although that moving average is declining. And this week we saw the break of 38.70. The market rallied up towards that level, couldn't get above it, and then we saw a successful retest of this 37.80 yesterday. So the range is 37.80 up to 39.10. Getting above this level here, then I think these semiconductors can finally participate in the market. But until that happens, they're just kind of range bound in here. But the weekly chart looks pretty decent, so we'll continue to give them the benefit of the doubt here as we are in an overall bull market. The IWM, obviously this market just a week ago looked like it was maybe in jeopardy of breaking down as it closed below that 200-day moving average. And as I pointed out that day, a lot of times the market will come down, trap the weak holder, get the weak holders out and trap some shorts, and from failed moves come fast moves. We saw a nice rally off there, and the market had been holding these levels with a rising 10, 20, and 50-day moving average. We've got a market that just is now showing us higher highs and higher lows, and anyone left bearish on this market hasn't been listening to the message of the market. The market is clearly stating that the path of least resistance is higher in here. So it continues to act good. Always give the benefit of the doubt to to the buyers when we have a rising 5-day moving average, and to the sellers when we have a declining 5-day moving average. That's been a great rule of thumb that's worked well for years. So continue to focus on looking at that. We are getting extended, but as I've been pointing out all week in the NASDAQ 100, this market just keeps getting more extended every single day. But that's not a reason to sell short or to try and pick tops. I was looking at this potential for a head and shoulders pattern. It was more easily seen on the 30-minute time frame. I was looking at this yesterday, showing that perhaps we were going to see another shoulder and a breakdown below that 51.10, 51.20 level. That obviously never occurred. The market did hold up above this rising 5-day. Well, it got back above the rising 5-day moving average, just put it that way. But I thought that 51.50 would be the level of support for today. Obviously, the market gapped up above that level and continued to trend strongly higher here. Looking at the 10-minute time frame, there's nothing bearish on this chart to look at. It's interesting that a lot of the Chinese stocks are finally starting to come in a little bit. I've been getting some emails from people that are looking at these stocks and wondering if they're still, you know, if they have legs, is what one person said. And these are sprinters' legs. These stocks are in these uptrends, but I don't think these uptrends are going to last for a long time in them. So just be very careful. I've been saying since the beginning of these Chinese stock runs that you have to be very aggressive when it comes to trading them.